team lead AlexShewilson.com, broker owner of Remax Wealth Builders Real Estate. And we also have Kyle, co-founder of Remax Wealth Builders Real Estate, an investment expert himself. How long have we been doing it's been over a year since this first launch. So probably about a year and a half we've been doing presentations on Galleria, the whole development. Both Kyle and I have bought in this, and we've sold 15 other units to our investor database in this project. We really do believe in it, and it's literally in our backyards. I live Dundas and DuPont area-wise, between Dundas, DuPont, and Bloor, and Kyle is over at Brock and Bloor. So we're both very close to this development site right here. And even when it was originally bought by Freed, and then ELAD was brought in, and then ELAD bought out Freed, we were always excited about this because we knew how much demand there was for this site in Toronto wise. So whenever a new tower launches with this, we're very excited. And we were talking to the builder yesterday, and they gave a fantastic presentation, better than our presentation. So we're actually going to use their presentation today because it really gave some insightful stuff about what's going on and this project wise. And also to give you some background, on myself, because we're using their presentation, this slide isn't there. But I've been selling real estate for 11 years now. Last year I was the #1 agent for transactions for all of Remax in Ontario wise. And we focus in on condos. This is what we do. And I've built my own personal portfolio from an initial condo that I bought in 2012 to now I'm at 15 condos, a house in High Park, and an apartment building in Hamilton wise. Total value of that portfolio being just over $14 million. And Kyle himself, he's been on this journey as well. How many properties are we at now, Kyle?
Up to 6 now.
6, yeah. Yeah, we have revised numbers. We both bought a condo this week. We're growing our portfolios wise, and it's truly a long game. Neither of us are in this for quick money. There's quick money to be made in these opportunities wise. But when you look at the long term, when I before I made my 2 recent investments wise, when I mapped out my portfolio over 30 years, in 30 years, my portfolio would be worth $33 million, and the entire portfolio would be paid off because you do amortizations on your mortgages for 30 years. And the beautiful thing is you have a tenant paying down the property the entire time. So really what you're doing is you're building your own pension fund. This is your financial security in your future wise, whether it's for yourself, whether it's for your children, whether it's multi-generational wise for your future generations. And there's a great video. Kyle, why don't you share this video, the video we did in the chat wise. A number of months ago, when we were doing our weekly videos, and then we kind of transitioned more to webinars wise. We'll get back to the weekly videos soon. Kyle's bugging me about it. But can we post a video about the Portuguese investor?
Yeah, for sure. I'll put it down in the link in the chat. I'll put it.
Yeah. So everyone, I'm not going to get into detail on it. But if we jump in, he bought in. This is like his area. Like his properties were in and around this area, more Davenport wise, because I've seen them on sale on MLS. But long story short, Portuguese immigrant came to Canada, no money in the 70s, 80s, passed away unfortunately last year, was a TTC driver, and amassed a portfolio worth $15 million worth of real estate wise. And I can be here and I can tell you, invest in real estate, my portfolio would be worth $33 million in 30 years. But it's great to show you an example of just a regular individual, which is a regular job, and he amassed a portfolio worth $15 million. So we talk about that in that video here. You guys should watch it when you have a chance wise. And that's just buy, hold, real estate wise. So without further ado, I've been rambling too long. Let's get into the presentation about Galleria. So I'm just going to share my screen here. For those of you who watch my webinars before, thanks for joining us, wise. Today we're talking about Galleria in the park. Now, as I mentioned, Galleria is both in Kyle and my backyards. It's a master planned community. It's going up, actually, it's massive. It's going up at DuPont and Dufferin. The Galleria 3 is actually it's a flat iron shaped building wise, and it's kind of the flagship building entrance. If I'm driving west on DuPont, and is really going to showcase this whole master plan community wise. But the site is so big, it actually straddles 2 subway stops. On this end, you'd be closer to the Dufferin subway, 10-minute walk to the Dufferin subway. The building Kyle and I bought in is right up on Emerson, which Emerson would bring you, if you walk down Emerson, brings you to Lansdowne subway stop if you walk to south on Emerson wise. So the site is massive, massive, massive. So it actually straddles 2 complete subway stops on the Bloor subway line. And what it is Galleria was the mall that was on the site. Really a mall that had never been updated wise, a 1-story mall. They've been tearing that down, and that's where they're putting the 8 towers, as well as a huge public park, which we're going to talk more about in the presentation here. So this is Toronto's most transformative, I can't even talk. It's a huge master plan community that's going here. And what's really unique about it is that it's going into a residential neighborhood. And why they're able to do that is there was a mall in here. If you go all around in the community area, we're talking about houses $1.5 million and above. If it's below $1.5 million, it's really a tear down, fixer upper kind of property wise. So we're looking for the renovated properties, $1.5 million and above surrounding this area wise, these homes, and you have this old residential mall in this area, which they're taking down the mall and they're building the tower. So, well, one thing is this is a very, very desirable neighborhood for people to live in, but there is really a lack of affordable options when you're looking at, well, it's $1.5 million to get a decent house in this area wise. So this is going to be the new affordable option for people that want to live here. Kyle and I have coined this area Central West. It's the demographic of the people moving here are going to be probably 25 to 30 years old, starting wise on the lower end of the demographic, going up to 30-year-olds, 40-year-olds, 50-year-olds, 60-year-olds. It's going to be people that want to live in Toronto, and on the older side that want to stay in this neighborhood, or on the younger side that they want to stay in Toronto, but they don't want to live downtown anymore. And this is what this area has to offer. It was a huge launch in fall 2019. Kyle, do you remember the launch event for agents?
I remember standing in that line, wrapping around the entire parking lot. I was away to even get there.
The launch was so big. It was the largest launch in 2019. There were so many people that showed up. This is back when people could be close to each other. There were so many people that showed up. They actually had to do a second. They had one that hadn't planned. And the venue was huge, but they had to do a whole second presentation that they hadn't planned for because so many people showed up for this launch wise. It was covered all over the media wise in 2019 and 2020. Huge community. And again, some people may go on this presentation, where is DuPont and Dufferin? But people that live in the city of Toronto know where DuPont and Dufferin is. And you're only a 10-minute walk to Bloor and Dufferin wise. Bloordale is the community that's just south of here wise. You get up to Geary, which is one of the hidden gems in Toronto, one of the coolest streets in Toronto that nobody knows about except people that know. It's really an area that is about to explode. So what's great about master planned communities wise, and I'll touch on each of these topics right here. So when we talk about public infrastructure wise, you have the massive nearly 8 acre park going into the space. You have a 95,000 square foot brand new community center being built that will be complete before the first resident moves into Galleria 1 tower. You have density. Density is a good thing. Density in the fact that you're bringing it'll be nearly 3,000 units when this project's complete wise, and that brings wealth to the area. And that will overall bring more amenities to the area, which is better for all the residents that live in the area. From a location standpoint wise, there's public transit. There's going to be you're a 10-minute walk to the Bloor subway line, but B, you're also on Dufferin, and Dufferin is an incredible bus route. And you don't really hear bus in a positive sentence usually. I've taken the Dufferin bus, Kyle. I'm sure you've taken the Dufferin bus before.
Of course.
It's probably one of the few buses in Toronto that I've taken. It is a reliable bus route. It's one of the busiest bus routes in Toronto-wise. And what it allows you to do is you can get up to Yorkdale in 25 minutes if you wanted to go to Yorkdale on the bus, or you can get to the X in 10 minutes taking that bus route. So the Dufferin bus route is a reliable bus route that you can use to get north and south in the city along Dufferin Street. Retail wise, there's going to be nearly 3,000 square feet of retail going into the space. You have a national grocer, national pharmacy going into the space. You have major banks that'll be going into the retail in the space. And what they're doing is you have the towers rising up, but on the ground level, you're going to have the retail. Remember, there was a mall on this location before. So this was a centralized location, a retail hub in the community wise. They're going to be replacing the retail that's gone with new retail on the bottom on the ground level of these buildings wise. So again, you're going to have a grocer at your doorstep. You're going to have your pharmacy at your doorstep. You're going to have your banking at your doorstep. Everything you want for a community wise. Again, public spaces, we talked about the community center. We talked about the huge park wise, and obviously transit, which I brought up as well. So this is the actual entire tower site. So Cal, why don't you talk a little more on the towers here and how many residents are going in?
Yeah, so there's going to be 8 towers on the entire site. And as you can see, are surrounded by it is just low-rise development. So most of these units are going to have amazing north and south views, which is pretty rare. If you go downtown, you're often looking into someone else's condo building. That's not really going to happen that much here, which is, a huge selling feature of it. There's going to be about 3,000 units on the site. And across those units, many are 2 and 3 bedrooms. I think they were saying, is it 50%, Alex, of the units?
Something like that, yeah. You're going to have a range of small to large units in here. But yeah, it just really allows you as a single individual to move in. You meet someone, you may want to go to a 1+ dense flex space. You could have a family in here to do a 2-bedroom to 3-bedroom wise. We've sold every layout in here. We've sold whether it's a 1-bedroom, or it's a 3-bedroom. We sold every single layout in the building wise. And what's great, if you do go larger, they do reflect that in the pricing wise. So what I mean by that is, if I look at my larger 3 bedrooms wise and how you compare units in our world, is you talk about price per square foot. Your smaller units are going to have a higher price per square foot. So that's just if I take the price and divide it by the square footage, that's how I get my price per square foot. But it's not equal across the building wise. So when you get into the larger 3 bedrooms wise, those actually end up being under $1,000 per square foot. The smaller units are going to be more expensive. So they do price it according to, you get a larger space, we're going to reduce the actual cost in the price per square foot model wise.
But this shows that they're really focused on the community. It's not going to be just a renting building. They're trying to build a destination here that's open to single people, young professionals just starting, up to entire families. Many of the inquiries that we've got on this development is actually from end users in the area that are interested in buying in this development as well.
Yeah, and if you look at us, neither of us are moving into it, but being in the area wise, we know the value. And we both bought in this future community, and it will really truly be a destination space. And when this building's done, when you talk about master plan communities wise, people will be like, oh, I want to live in the Galleria neighborhood. That's what people will be saying. And if we compare it to, let's say, something like a Liberty Village wise, Liberty Village wasn't really a master plan community. It was just a bunch of builders putting towers up. And you really get you don't get a cohesion in the development wise. I think that's the most politically correct way to say it. But here you have a builder, and this was an amazing line that when I was talking to the builder yesterday, you and the builder are lockstep in this, in the fact that they've sold tower 1 or 2, we're on tower 3, but there's 8 towers that they have to complete. So the success of the entire development, the success of the development, you guys are together in this. The builder wants prices to go up because that's what they have in their formula. They are going to sell every future tower at a higher price point wise. So in their mathematical formula, in regards to the profitability of the project, every future tower is going to be more expensive. So it's in their best interest that your investment maximizes the value, because they're not just selling one tower, they're selling 8 towers at different dates in the future wise. So you and the builder are in lockstep to the success of this project. Whereas a one-off tower wise, builders like, okay, it could be, I sell this building and make my profit, I'm out of here. You know, they're not as other than their brand name, they're not as committed to the neighborhood wise. You have a developer that is, their money is where their mouth is. They're financially committed to this location because they have a lot of future buildings that they have to sell. And when I heard that, I'm like, something went off my head. We've never talked about that before. Never. We've just talked about how, oh, the builder has future prices, increases built into the future launches, but not thinking the fact is, yeah, but your success also spells more success for the builder wise. So I thought that was a great line, and I wanted to share that with everyone.
I know it can look scary that there's going to be 8 towers on the site and 3,000 units, but keep in mind these towers are going to be spread out by several years for them completing. It's going to be 1 or 2 years between each one. So there's not going to be a sudden flood of units coming to the market because you're going to have that time to absorb all of that. It's going to be about a 10-year construction and development plan across the entire site.
Yeah, and you know what? I'll add on to another master plan community that I've invested in, and watching something grow. The Canary District, which is right beside the Distillery District. I bought a unit in their 3rd or 4th tower. I believe it is, and they still have a few more towers to go. But when the first towers launched, I was a little negative because I have blinders on and I didn't see the future wise. I was earlier in my career. I've learned more. I've grown more. But I have my blinders on going, wow, that project's in the middle of nowhere, but not seeing what was going to happen in the future wise. Now I love the Canary District. I see huge upside in the Canary District wise. It still has not reached its full value yet. There's still more coming wise, but they have the they have the large green space, 18-acre park, Corktown Commons Park, that's anchoring at its base wise. You have a future subway site that's going to be going there. You have the retail that's been built in there now. It's coming along, and I'm seeing the fruits of the builder's labor wise. And again, that builder is still committed to the success of the site because they have another building they need to launch. They have 2 more buildings I know at least that they need to launch in that site wise. And you're really seeing it come around. So that's the beauty of getting in one of these master plan communities wise. If you look with a 10-year vision, it's great. And not everything's coming up at once. Everything's going to be staggered out wise. And we talked about, I already talked about the retail wise, but to hammer down the retail point, you're going to have the national grocery store. You're going to have the top tier banks. There will be a fitness facility in here. You have national pharmacies, restaurants, cafes. That's what creates a neighborhood wise. And this will be all built into the community. And then the green space. So 8-acre community park. This is in pre-COVID times, green space was incredible. Now, in this COVID environment wise, green space is a must. So to have an 8-acre park being built in the middle of the city wise, they brought up a great point yesterday. Anyone that's familiar with the Well development downtown, which is a huge development site going up that's spanning between Spadina and Front, all the way to nearly Portland, off of Front Street to Wellington wise. This park is bigger than the entire Well development, which is 3 condo buildings, a office tower, and a whole other residential mall. That gives you an idea how big this new public park will be. So now imagine, you're living in a condo wise, it may not be as nice as having a backyard or those kind of things. But also, if you want a backyard and everything in this neighborhood is 1.5 million and above. So what's your alternative? Well, I can only afford a condo, but I have my green space. And that is huge going forward. Green space may have not have been fully appreciated it's definitely going to be appreciated in the future. And this makes it a huge selling feature for this development wise. And also, whenever you go to Europe, you know what the most expensive real estate is? It's the real estate that's facing onto the green space, onto the park wise. So that's something to factor in as well. Transit, you have the connectivity of the Bloor line. We talked about the Dufferin bus route. You even have, for those that don't know it, I did map it out. It's about a 25-minute walk. I live close to the Union Pearson Express. Truly an undervalued public transit gem in this area wise. When I need to go downtown, I actually don't take the subway. I walk over to the Union Pearson Express and take the UP Express downtown. It gets me downtown in 8 minutes. It's about a 25-minute walk there, but you have a very nice, you sit down. I've got a beautiful seat that I sit down in, and I'm 8 minutes right downtown wise. So if you wanted to avoid the subway, you do have an option to quickly get downtown. Again, 25-minute walk, a 25-minute walk down here, then 8 minutes right downtown, leaving every 15 minutes wise. So it's something that's great to have in the neighborhood. And this gives you an idea if we look down at the site wise. So up here we have Galleria 1 and 2 where Kyle and I bought in. This is Galleria 3. So you can see the flat iron style of the building wise, different architectural style to make it stand out from the rest of the buildings going in. And then you can see if you're traveling in, this is DuPont right here. This is really the gateway building to the community wise when I'm driving west. It's going to be very striking and stand out in the future wise. And then we see the huge park space right here and the brand new 95,000 square foot community center. So speaking of the community center, it's going to be one of the largest in Toronto wise when it's complete. And one of the big things is that this community center will be complete before the first resident moves in. Very important. So that means if you're the first one in, whether Galleria 1, 2, or 3, you're not waiting. You may be out of the investment by the time the community center is done. If they waited to the end of the full development wise, then they're going to build a community center. And I'll use an example. If I look at City Place downtown, and if you've been driving by City Place over the last year or two, you saw a construction site, which wasn't a new condo building. It was a school and community center. All the condos are now sold in City Place, and now they're just finishing the community center. Literally this year, they just finished the community center. Over 10 years of development in the condo wise, multiple levels of ownership in regards to people buying pre-construction units, people selling them, end users buying and the end user selling that. You've had multiple layers of individuals buy in those initial buildings wise. And now finally the community center and the school is coming in. You don't have to deal with that here. This is being built first. And I think that is a huge plus wise. And Kyle and I love hammering down that point. So again, you're gonna have a gym, multi-purpose rooms, community kitchen, swimming pool, dance studio, running track, childcare, massive childcare, playground, green roof, again, fitness facilities, and an outdoor skating rink, which is really cool.
This is in addition to the amenities that are going to be built in the building.
Yeah. This is for the community wise. This is separate. This is public, City of Toronto, public, community center wise. Then you have your own private amenities in your building. So there we go. We just got a great image wise, just looking southwise of the flat iron Galleria building wise, and the presence is going to have in that area. Here's some great renderings coming up. So very elegant lobby. There'll be a rooftop pool for you to relax in. Private dining room area. So again, if you want to have dinner parties in the future wise, those kind of things, yes, people will be living in a smaller space, but you can still do family gatherings in their private dining areas. Outdoor space, private outdoor space on the rooftops. Beautiful party rooms. Co-working space, very important. Again, when we look at this post-COVID world, I firmly believe that people are going back to the offices, so I'm not worried about that. But the flexibility to work from home is here to stay wise. So people may go in 2 days a week or 3 days a week, then they're going to work at home 2 days a week. So this, the co-working space or a space to work in the building wise is going to be huge in the future. You'll have your own private fitness facility in the building. We've talked about this being a multi-generational building wise in regards to you can be single here and you can raise a family here. So you will have space specifically designed for the children in this community. We saw it in the first towers. You're going to see it in the third tower as well. I see someone raising their hand wise. We'll answer all the questions at the end of the presentation wise. So feel free to put the questions in your Q&A box. So I think the kids' room is great wise. I can say having a 1 and 3-year-old, I do go to the office now because I need to get away from the kids. So having a space to not that there'll be a caretaker on site, but somewhere just to have the kids engage with other kids potentially in the building wise or for them to play, I think is going to be great. Just give you an idea what the units are going to look like. Here's a rendering of the kitchen, your living room. This is on the flat iron curve side, so I think it's really cool. Some of the curves that you're seeing in this building wise. Giving an idea of the overall amenity space, so fitness center, post-workout relaxation room, separate spin room, meditation room, separate yoga room, outdoor yoga space, lounge seating, place for your pets, place to do spa work. So if you want to get massages, that kind of thing, there will be separate rooms for that. The co-working lounge, the kids play zone, truly a large package of amenities that'll keep people in the building wise, which is great. As well, we can go to the 11th floor. So those were the 3rd floor amenities. Then we have our social amenities. So again, outdoor pool, private dining room, more kids club, social lounge, outdoor games area, outdoor dining area. You'll be able to go here, barbecue, a great place for people to gather as well. And what they're doing, so we've talked about community-wise, they've developed something called ELAD Link. So what it'll be is you'll be able to control your units from your smartphone wise. So keyless entry to your units. I've seen this in 10 York, which is a Tridel building in downtown. Literally, there's no keys. You have no keys. You have no fob. We sold a unit, and it was like, okay, the lawyer's like, where are the keys? There were no keys. Everything was done by your phone. Even your mailbox ended up being combination based wise. So your phone, you used the phone to get in the building. You had a combination for the door wise. It was incredible. So that's what they're doing in here. You're gonna be able to join Wi-Fi in the amenity spaces. So great for when people are working from home. There'll be a community app. So you'll be able to communicate with other community members, which I think is fantastic. I've seen condo buildings active Facebook groups. This takes it to another level wise. So again, building that community wise, integrating with your neighbors. It may seem closed off in the fact that you go to an elevator and you go into a hallway wise. This app, this ability to communicate with other residents in the building will truly foster that sense of community in an overall building wise. You'll be able to book amenities on the phone, which will be great. There'll be electric vehicle charging stations, which I can tell you on the resale side, I'm getting more and more questions and people asking if I have the ability to have an electric car, which I've had to say no. And that has turned away potential buyers for these properties wise on the resale market. So having the ability to charge an electric car is important, moving forward in the future wise. Just being able to have parcels dropped off and notification for the parcel wise, a system for that, huge. And then having your suite metering with your hydro and water, being able to monitor that. So thinking forward wise and having this technology system built in, is people will be looking for this. And I can guarantee in the future wise, when we're selling resale units, people will ask like, oh, how will I buzz people in? I already get that question. So I just buzz people in. How will I get my packages wise? How will I be notified about packages? The amenities, how do I book my amenities? Future residents will insist on this. And if a building doesn't have it, there will be a discount placed in that building wise. It's all about convenience moving forward in the future. And this is another slide from yesterday when we were talking to builder wise, which really hammers things down. So Kyle and I throw out randomly, hey, master plan communities are great. You're going to make money wise. But here is actual statistical data showing how master plan communities outperform the other buildings in the area wise. So Emerald City was another master plan community built by ELAD, which launched in 2008. So the area and the master plan
in and out.
You get a 25% bump just by buying in the master plan community wise versus the other buildings in the area. And they didn't, it was great because they didn't just cherry pick in regards to, okay, here's our development, let's show this number. Then they showed City Place. So they showed the appreciation in the general area, 125% from 2009 when it was launched, 182% in the master plan community area, 57% difference wise in the price appreciation. Bayside, this is the Tridel development on the water, 76% versus 110% in the master plan community wise. So Kyle and I have talked about before, oh, you're going to make more money just by the fact they're going to be increasing prices on future buildings. But also just in the fact that there is a brand and the builder is committed to the future success of the master plan community wise, you see a jump in the overall appreciation of the resale market. The resale market, the open market realizes that that advantage as well. And you see a difference in the appreciation too.
Again, with the master plan communities, you're creating a destination, which is actually creating demand for these areas as well.
Kyle, you weren't even at the presentation yesterday, and literally that's what they said. So that's a great line. But this here was actually my favorite slide in the whole presentation.
This is kind of mind blowing, actually. I love this slide.
Yeah, like it was wow. So Kyle and I do a lot of work downtown Toronto, and downtown Toronto's not good right now. You know, we're not shy to say that. We actually see great opportunity in downtown Toronto. We will have future presentations on that coming in November wise. So I'm not going to go into too much detail on that. But this is just a mind-blowing slide. So why is downtown Toronto hurting right now? Well, office buildings are closed. International students have slowed to a trickle. Immigration is slow. If we look at the total number of units available, and this isn't even downtown. What this is this here, the Church and Jarvis. This is a 1 kilometer radius of Church and Jarvis. If I actually looked at the overall availability downtown, it's much worse. It's actually 8,000 units if I look at the resale and the rental together wise. So within a 1 kilometer radius of Church and Jarvis, there are 417 available resale units and over 1,700 units available for rent. Kyle and I can attest to these numbers wise. I have calls every day with my team talking about what do we need to do to the rental market? What do we need to drop the price to? What do we need to drop the price to get these units rented wise? At any given time, us as a brokerage wise, we're carrying 30 plus rental listings. And they're all sitting vacant, generally at least a month wise. And we're slash price on my own personal inventory, on our investors' inventory. We've had to do that. And again, we're not worried in the long run wise, but it's really bad. Versus Galleria in the Park. In it, if we look at the same geographical area, 17 resale units available, 20 units available for rent. Total 37 versus 2,128. And again, that's not even painting the full downtown picture. It's much worse. It's over 2,000 units for sale and over 6,000 units for rent wise. And if we look at the actual pricing wise, prices have gone up in this area during this COVID time, where prices have gone down in the downtown market wise. So this market, just by its nature being separated from the downtown core, so away from the density wise, in a community-based area, it is seeing a bump in price versus a decrease in price on the rental side and on the pricing side. So a line that again I heard yesterday was, it's a sporting reference was, great success comes, don't look where the puck is right now, to where the puck's going to be. And this is the area where the puck's going to be in the future wise. Again, Kyle, if you look back at our presentations on this, we've spoke about this before. We're on record on this over the last year and a half, telling people that this is going to be the destination in the future wise. Now, this is giving you some hard, concrete facts going, okay, moving forward to the future, where are people going to live wise? There's not going to be a full exodus of Toronto wise. We're seeing the resale prices of houses, the gap between freehold and condos, it's going like this. And what happens when it goes like this? There's only so many people that can afford to live in freehold houses. So where do they go to? Where's the next step? Then they have to go to condos. It's just a mathematical stat. And they don't want to leave the city. Not everyone wants to leave the city and go buy an acreage in the middle of nowhere, or go move to a suburban space. Kyle's never moving. This is where the future is going to be in regards to these islands within communities wise, where people are going to want to be part of the community wise. They don't want to live in the downtown core anymore, but they still want to live in Toronto, and they want to be able to easily access the downtown core. So I love this slide. Anything else you want to add to that, Kyle?
Well, we saw the exact same scenario in around 2014, 2015, where housing was just going up like crazy. And like you mentioned, that gap between the condo prices and the housing prices, it was significant, and it grew quite a bit during that time. Then houses plateaued for a while, and then condos shot up throughout 2016, 17, 18. They were appreciating at 30% a year at one point. So you'll expect that to happen again, because it's that affordability. It's going to top out on the housing. And then again, the only thing that'll be affordable will be the condos again.
And I also like to add, what's great about this is this building isn't really realistically finishing. They're saying occupancy starting late 2025. So realistically, you're getting these units in 2026. That gives you the buffer zone. That gives you the 5+ years to get away from the statistical anomaly that is 2020, and allows that growth to come in. Again, freehold houses, there's only going to be a certain segment of the population that's going to be able to afford those freehold houses. Where else are people going to live wise that don't want to live downtown? This is one of the neighborhoods wise. And if you don't know it, Colin, I don't know if you're on here. I'm going to shout out to Colin Wise. We've been chatting about this. He's someone that's lived in the area for a number of years. He knows it. He sees it wise. If you don't know about this area, this is the area that will be everyone will be seeking in the future wise. And I think we go. So we talked about the team. The architects wise, worldwide architects developed the Shangri-La, the ROM. They've also done the St. Regis in Toronto, Momofuku in Las Vegas. They've done work in Los Angeles. This is the interior designers, a design agency that's working on this one. Janet Rosenberg Studios, very, very famous for their outdoor work-wise in regards to your landscape architects. And then you have ELAD, Canada-wise, a multi-billion-dollar real estate development company. They focus in on master plan communities. They only do master plan communities. So Emerald City is a completed master plan community they've done in Toronto-wise. They'll be doing another large one called Lansing Square that'll start launching next year-wise. They know how to build master plan communities. They don't build one-off buildings. They just focus in on master plan communities-wise. And then because you guys are on our presentation and you are looking to potentially invest in here, we have access to some great incentives-wise. So one of the key things is deposit structure when we talk about investments-wise. So what's my capital outlay? So what they're offering is basically a 5% per year, total 15% deposit structure-wise. So what that means, it's typically on signing-wise, you give $5,000 and the balance of 5% in 30 days. Then an additional 5% will be due in 210 days. So basically you have a deposit coming in 2020. You'll have a deposit in 2021. And then your next 5% will be 460 days, which will be another deposit in 2022. So when you're looking at your capital outlay, you're looking at, okay, what I just need to come up with 5% per year. How do I do that? Now, if you're buying something that's a little bit larger, they've even extended the deposit structure further wise. So they'll do anything at $875,000. So what they're also including parking in that. So if you were to buy a unit, let's say $820,000 and you bought a parking spot for 60, that puts your purchase price at 880. Then they would give you the even longer deposit structure, which is 5% in 240 instead of 210, 5% in 700 days versus 460. So they're even giving a longer runway for the deposits wise, which is great. Free assignment, the right to lease during occupancy wise, obviously capped development charges. And then on the larger units, the 3-bedroom units, they'll give you a free island as well. So those are all the incentives that the builder is offering for the initial purchasers in this development wise. Platinum is us, we're platinum agents wise. That's what they refer to that. And that's the presentation. So I'm going to stop sharing my screen here now and opening the floor to questions wise. Okay, so Jason asked, do you think there'll be enough demand for rent in the area to fill 3,000 units in this mastermind community wise? My worry is if I put a unit on for rent, I'll be competing with a lot of other units in the community. So Kyle, you want to handle this one? I can let you jump in on this one.
So we don't see it as a concern really at all. You look at City Place, kind of a similar situation. It's, tiered launches. It's going to be several years between each of the developments. So you're going to have time for people to come into the area, take up the units that are available. And, it really won't be a concern. Like we mentioned before, this is going to become a destination that people actually want to come to. So even though there aren't a lot of units for rent right now, people are going to start demanding to be in this area to take advantage of the park. All the amenities are there, how convenient it is, and how accessible it is as well.
And I'll also add on, just if we just give firm numbers wise. So for example, Cal and I bought in the first tower. That's realistically going to finish in 2024. When this one completes, realistically 2026. So that's a 2-year gap between the first and second tower to the third tower, and you're going to see similar gaps into the 4th, 5th, 6th, 7th, 8th tower wise. So you're not going to have 3,000 units coming in online wise. Everything is going to be tiered, and as more buildings complete in the area, as Kyle says, it becomes a destination point. I want to live in the Galleria neighborhood wise. And if you look as we looked in the general area wise in regards to what's available for rent, what was the number? Was it 17? There was only 37 units in total for sale and for rent wise. So in regards to the availability for rental, you're not competing against other buildings because there really isn't that much out there for options wise. So this becomes the options for that area. So not only do you have the tiered completion of units, you're not going to have 3,000 units completing at once. You are also not really competing with as much in the area wise. And again, for the other buildings that are coming in the area along DuPont in the future, this becomes a destination point. Where do you want to live? Do I want to live in the one-off building, or do I want to live in the building where I have a grocery store, a pharmacy, a community center, a green space? Nothing else has that. This is the only one that has that, and that's your competitive advantage. I just noticed here. Okay. Oh, you're okay. Okay. True success. Just talking about covering my mic wise. Was it me or you?
It is you. Your sound was cutting in and out.
Oh, it's cutting out. So I'm sorry, guys. It's my animated gestures. This is, as I said, this is all being recorded wise. We also have the floor plans and pricing available as well. So when we send the recap of this video out to everyone, we're going to include the floor plan and the pricing wise in this so everyone can review those and everything like that. There'll be opportunities to book one-on-one Zoom calls with Kyle or myself. So Kyle, in that email, include a Zoom link for yourself as well. The recap email wise, so you can book Zoom calls with us over the weekend wise if you want to talk about the project more. As well, we will be taking appointments to take people through the sales center. The building is fully launched now. We are the experts. We live in the area. We've invested in this community-wise. We answer any questions that you may have on the project-wise. We think it's your best value investment in Toronto, because we know what other launches have sold for, and you have 2026, the runway. So the low cost of capital up front with the 5% per year, and then the runway for appreciation wise. So the key thing is when you look at these investments, if let's say I invest $100,000 over 2 years, because that's what, over 3 years, 2 to 3 years, and my property goes up $100,000, I've just doubled my $100,000. So that's the great thing about real estate wise. And then if you watch our videos where you talk about refinancing money out, growing a portfolio, and then growing to 6 properties like Kyle has, or 17 properties that I'm at now. Again, the 15 condos and the 2 other real estate properties wise. That's how you do that. That's how you build it. But we think this is a great one to add onto the portfolio by your portfolio for a Toronto investment, and really has a competitive advantage against anything else that's definitely coming in the neighborhood wise, and has the unique location of not being downtown, which has its own positivity and scarcity as well. See if no other questions here. So we'll end it here. Thank you so much, everyone, for taking your time. This will go out to you this afternoon. Okay. Thanks, guys. Bye-bye.